Good afternoon, friends. I extend a very warm and hearty welcome to all the participants and the learned speaker to the 86th webinar on returning value to the stakeholders by shareholders, buyback versus dividend. It is being organized by Corporate Profession as a part of its knowledge initiative. Based on the recent experience, it has been observed that there is a constant dilemma amongst board of listed entities and CFO as to declare a dividend or to undertake a buyback. To return value of the shareholders, both options have their own perspectives and consequent impact on the companies. There are regularly implications and modalities as well as in both the aspects. The objective of the webinar is to take up and discuss with the few of the corporate that recently came out with buybacks and which keep declaring dividend as well, and assimilating from them the impact on the financial taxation aspects, the key points which need to be kept in mind, and the regulatory nitty-gritty involved while deciding between buyback and dividend will also be discussed, because when they discuss in their board, then they are asking multiple questions. So what are the issues they have faced, and when they are implementing this plan, how much issues they have faced, so they can the other participant can take benefit of their experience. Today we want to discuss certain areas in this topic: modus of returning value to shareholders, taxation impact on each aspects, why buyback and what benefit it can enumerate out of it, regulatory provision, impact on financial structure, and corporate experience. Three speakers will share their point of view. We have a galaxy of experts. Before I invite them to make their presentation, let me perform the pleasant duty to briefly introduce our London speaker. First, we have Anjali Agrawal. She is a FCS partner and head in capital market, corporate profession, has a current to 19 years experience in handling capital market transaction, right issue, buyback, professional development, and other stock exchange related thing. And she is handling the SEBI related matter, or letter of offer, prospectus, information memorandum, allotment of securities, and various other things. She is has been a guest speaker in various professional development programs organized by IICA, ICSI. She is a distinguished speaker at various webinars and also appeared on television show. She has guided her team in developing various online venture of the group. I welcome Anjali. Then we have our next Poonam Bhasin. She is associated with Nucleus since last 2 decades. During her long association with Nucleus, and she headed multiple corporate action, preferential issue, merger, issue of bonus shares, buyback, 2017-2021, SEZ operation, and etc. She has expertise in setting robust compliance framework and handling SEBI, FEMA, custom, company law matter since years, and additionally handled the global compliance for various overseas subsidiaries of the company. Under her able leadership, Nucleus Software has been awarded for following best practice of corporate governance by SOCM and other renowned institutions. I welcome Poonam Madam, and we will definitely get the advantage of your vast experience, and specifically 2 buybacks you have done in 2017 and 2021. We will get knowledge and insight. I welcome you for this program. Our next speaker is Sumit Gambhir. Sumit Gambhir, he is a fellow member of ICSI and senior corporate legal professional and company secretary with 3 decades of experience in managing a gamut of matter related to corporate legal affairs and corporate governance, risk and compliance, company secretarial, brand protection, litigation, cybercrime matter, investigation, labor law matter, people management, and with good leadership, team management, general management, and PR. So I welcome Samit. He is the Vice President and Company Secretary of DCM Shriram Group Limited. I welcome Samit, and your experience of 3 decades as well as your experience in buyback will definitely help our learned delegates to understand the nitty-gritty. I welcome you. Then we have Tushar Shukla. He is a member of ICSI and manager capital market division, corporate professional. He has more than 5-year experience in investment banking and merchant banking. So friends, I welcome all the our 5 speakers, and today their experience which they are doing, because Anjali has handled I think 6, 7, 8 recent in buyback. So we will definitely get the insight of issues. So whenever you are making a plan, you can be well aware of this. Friends, our purpose of organizing this program is that how we can share knowledge, how we can be proactive, how we can see that corporate, whatever issue, corporate action they want to do, they should know the procedure, as well as they should know from the people, those who have done this work, that what problems they have faced and what do's and don'ts they should take care. So what issues they have faced, other people should not take. So that is a object of these types of webinars which we want to do. And today's our structure is that first Anjali will give presentation on this, comparing buyback, dividend, how the buyback is taking place, what are the things, which are the points somebody has to take place, what are the modes of buyback, tender route or market route, whatever it is, she will tell the advantage. Tushar will add the taxation aspects in this. Then Samit Gambhir will speak about his experience and his advice related to this topic. And after that, Poonam Bhasin Madam will speak. And then we will have question answer. I have received around 40 questions already from the participant. And some questions are very interesting that we will cover. And I hope after the program, no questions, no confusion will be there. In case any issue is there, SEBI has asked us so many times that whatever changes the buyback regulation the corporate India requires, we can compile and send it to them. So we'll do the same thing again, which we are doing every time. So friends, before starting this topic, I just want to tell that what is happening. Every company wants to remunerate their shareholders. They want to do something for the shareholder. So we have one point that is that you pay the dividend, but dividend yield is very less. A share price is 5,000 rupees, 2,000 rupees, 3,000 rupees, and face value is 10 rupees. And in 10 rupees, somebody is giving 100% dividend. That is only 10 rupees. So compared to 500 rupees shares, 10 rupees is nothing. Yield is not. And sometimes the company has some other restructuring plan. They want to do financial reengineering of their capital structure and simultaneously reward the shareholder also, those who have worked them. So they bring out the buyback option other than the dividend. And sometimes some company give the bonus also. So today we will discuss all issues, that what is buyback, how it is different from dividend, what is the taxation aspects, what are the decision making point, and how we want to follow this. And then in the buyback, what types of buyback we can do, tender route, market route, what are the difference in this, what is the taxation, how much tax will be there, and the procedural aspects, that what procedure should be there, and what points everybody should understand and follow. So without taking much time, I'll request Anjali to give her presentation.
Thank you so much. Thank you so much, sir. I'll share my screen. Is my screen visible?
Yes, Anjali, yes.
Yeah. So as the topic itself says, returning, first of all, good afternoon, everybody. Returning value is the most important thing that everybody, each one of us desires to have. So returning value to the shareholders is all the more important, because we are not just talking about ourselves as a company, we are talking about the shareholders being our stakeholders, how to return value to them. There can be two ways, buyback versus dividend. So while we were discussing the topic, it came to our mind that why should we be talking about it, or how this particular webinar can be different from the other webinars that we have been having. The other webinars generally are law-based. Here we have tried that we'll not be talking too much of the legal provisions. They're very much available at various places. But then we wanted the CFOs and the compliance officers to be able to take a strategic decision as to which of the modes can be more remunerating from the shareholders' point of view. So when we talk about value, in case of companies, there are generally three ways of returning the value: dividend, bonus shares, or a buyback. Each one of these have their own benefits. Each one of these have their own nitty-gritties, procedural requirements, and how they are different from each other we'll be taking up in the coming slides. Dividend, we all know, is returning of distribution of profits by the company to its shareholders. Buyback is repurchase of the shares with the intent of not just returning the value, but also optimizing the capital structure of the company. And bonus, will not be going into any further details for a bonus issue, but then bonus is issuance of additional shares to a particular shareholder, depending upon whatever number of shares he holds in the company. Dividend has been there since times immemorial. Ever since the corporate structures came into place, dividends have been there. Buyback during last 2-3 years have gained momentum, and there are various reasons to it. Some of the trends that we have seen in the last few years when we talk about buybacks, this is obviously the listed data only, unlisted data is not available. 2016-17, there were 49 buybacks, 17-18, 59 buybacks, 18-19, 63 buybacks. This was primarily due to change in the tax regime of the country. 19-20, we saw 52 buybacks, 2021, 63 buybacks. 2021 was the year when the entire world was hit by COVID. And we realized that by virtue of these buybacks, the companies were trying to portray or convey their confidence. The managements were trying to convey confidence that they're confident about the company, and they were returning simultaneously, they were returning value to the shareholders. Last financial year, we saw 40 buybacks. And in these 1.5 months, we have already seen 4 buybacks. And all these buybacks have ranged from 34,000 crores to 31,000 crores, or in the current financial year, 1,300 crores, we have seen it. And it's not just that the companies are coming out with buybacks only once a year, only once in their lifetime. There are companies which are coming out with buybacks regularly. Balrampur, for example, Balrampur Chini in last few years has come out with 4 buybacks, Wipro 4 buybacks, Aarti Drugs 4 buybacks, Tata Consultancy 4 buybacks, Jagran Prakashan 4 buybacks. So all these companies are regular in coming out with their buyback issues. But why so? There must be a reason to it. So we'll try to explain the reasons in the coming slides. So there are certain key decisive points wherein some of the important points, most important being taxation. Income tax in the hands of the company, in the hands of the recipient shareholders, plays a very important role in deciding whether to come out with a buyback or dividend. Dividend buyback is again an inorganic tool. I'll be explaining all these points in the coming slides. Inorganic tool for consolidation of promoters' shareholding. That again is a very important aspect from the promoter's point of view. Revocation after declaration and consequent liability in case of buyback as versus dividend. Funds utilization in case of buyback and dividends, there is a huge lot of a difference, and EPS and return on equity. Apart from these, some other important points like approvals or funds availability with the company also play an important role in deciding which of the modes to choose. One thing which is very clear that these two cannot be substitute of each other. These are two independent corporate actions which we have to keep in mind. Taxation, we'll be covering in detail. My colleague Tushar will be taking up to the taxation provisions. Over to you, Tushar.
Thank you, ma'am. Good afternoon, all. First of all, I would like to express I'm glad to share this platform with so learned speakers. Now, coming to the topic, as considering the decision that one should go with the buyback or one should go with the dividend for distribution of returns to the shareholder, taxation plays a very significant part. Now, if we talk about taxation in the buyback, first of all, no tax in the hands of the shareholders in buyback is applicable. Uh, it's a tax-free income in the hands of the shareholders. In case of buyback, so then who pays the tax? The company pays the tax at the rate of 20%. Cess and surcharges are over there. Effective rate of on tax on buyback is 23.3%. Coming to the next slide.
Yeah.
So how we compute this taxation on the buyback? So tax of 20% is to be paid on the distributed income. What is this distributed income? As per section 115 QA of the Income Tax Act, it defines that buyback consideration the company pays to be subtracted by the amount the company has received against the shares it is buying back. To illustrate it further on the next slide. Can we go further with the next slide, please?
Yeah.
So we have taken a brief example to explain it more clearly. For example, the company issued 1 crore shares at the rate of 10. So the company received a 10 CR amount. Now the company is doing a buyback of the same 1 crore share at the offer price of 100 rupees. The company is doing a buyback of 100 crore. The tax is to be paid on the distributed income. So while calculating this distributed income, what we do, the 100 crore of buyback we are doing, the company received an amount of 10 crore against these 1 crore shares. So the net distributed income is 90 crore. On this 90 crore, we need the company has to pay 23.3% of the buyback tax, which will amount to 20.97 crores. Now coming to the taxation of dividend. Now we have talked about the taxation on the buyback. So we discuss about the taxation on the dividend. In the Finance Act 2020, the taxability on the dividend shifted from the hands of the company to the hands of the shareholders. Now, is there any tax the company pays or deducts? That yes, there is. The company deducts a TDS of 10%, but not all the dividend. TDS will be deducted by the company on dividend paid in excess of 5,000 in a year to the shareholders. Apart from that, company does no tax, and this tax TDS will be 10%. Coming to the next slide. So how we calculate the tax on the dividend? Let's suppose there's a company in which promoters hold 60% and non-promoters are holding 40%. Profit before the tax is 100 crores. The company first pays a tax of 25% bare minimum on this 100 crores. We are left with the profit after tax of 75 crores. The company declares all the 75 crores as dividend. The promoters portion will be 45 crores and non-promoters portion will be 30 crores. Now, point to be noted here that all the dividend the company is paying to the shareholders, all these shareholders will be additionally, the company has once paid the 25% tax. Now, additionally, all these shareholders have to pay income tax as per their slab rates. To explain this, we have taken this on the next slide. This is a comparative we have done for the taxation in the buyback and the taxation in dividend. How much tax is applicable in the hands of the company? In the buyback, as we computed in our illustration, it is 20.97 CR somewhere. Now, in the dividend, the company first pays 25 CR. In the hands of promoter, the buyback tax is not applicable at all. There is no taxation in the hands of shareholders in the case of buyback, the income they receive from the buyback. But in case of dividend, they have to pay taxes. In our example, the promoters were getting 45 CR out of the dividend. They have to pay a tax of 42.74%, which amounts to be 19.23 crore, assuming these to be maximum marginal rates. This is in addition to the 25 CR the company has paid. Then these shareholders will extra pay income tax 42%. And apart from these promoters, the non-promoters have to pay income tax as per the applicable tax rate according to the slab rates defined by the ministries. Now what we notice here, in the case of buyback, the taxation comes only at one level. When the case of dividend, it is coming at multiple levels. So this is gonna be a very big decisive factor. Can we move to the next slide, please? In buyback, we have paid only 20.97 crore of tax. In the dividend, we have already paid 42.23 crores. Additionally, non-promoters will be paying tax as per their applicable rates. The taxation impact is very big in case of dividend and very low, we can say, as per our example, in case of buyback. Over to you, ma'am.
Yeah. Thank you, Tushar, for explaining the tax implications involved in both the buyback and dividend. And we can see from the present slide, there is a whopping difference between the buyback taxation and the dividend taxation. So this is one of the major reasons for the tilt which happened during last few years in favor of the buybacks. Now, buyback, when we talk about the promoter holding, in India presently, still 95% of the companies are the companies which are promoter-driven companies, which are majorly holding in between to say 60 to 65% in the of the paid up capital of the company. So obviously they want to have more. There are two alternatives: either to make fresh allotment to them, to the promoters, or this is an inorganic tool of consolidating the promoters shareholding. Buyback is a inorganic tool for consolidating the promoters shareholding, whereas promoters do not participate in the buyback and only public participates, then the promoter holding will increase of the reduced paid up capital of the company. It also provides a protection to the promoters from loss of control because of any hostile takeovers that may happen. Then there is an important concept: once declared, is it a liability for me to complete? Buyback, once declared, can be withdrawn subject to the provisions of the SEBI buyback regulations. Up till the date of public announcement, they can be withdrawn. After the public announcement, they cannot be withdrawn. But dividend, once declared, becomes a debt due to the members and thus cannot be revoked. So this is an obligation which falls on the company, that the dividend, once declared, has to be always paid. Funds utilization in case of a dividend, in case of a buyback, is limited only to the extent of tendering of shares. So if I come out with a buyback of say 100 crores and the entire public tenders their shares, I'll have to pay out 100 crores. If only 90% of the people tender their shares, it will be only to the extent of 90 crores. The company has to pay only up to the level of tendering that I've explained. Dividend, once announced, the entire amount, taking the example of what Tushar said, if the paid up capital is 100 crores, I declare a dividend of 10%, that is 10 crores. So entire 10 crore is needed to be paid, whether anybody is traceable or not traceable. In fact, even upon completion, any unpaid amounts are needed to be transferred to the IPF account. So entire amount becomes a liability for the company and has to be utilized, whether a particular shareholder is traceable or not traceable. Buyback impacts my EPS and my return on equity. My ratios become more favorable because buyback leads to an optimization of my capital structure. My paid up capital gets reduced to the extent of shares bought back. Accordingly, thus the ratios get improved and hence the valuations as well get improved. Dividend does not impact my EPS in any way. Rather, for the future times to come, for the next balance sheet, there is a reduction in the net worth of the company to that much amount. Price movement, both the corporate actions give a spurt to the price then once they are declared. But when we talk about buyback, the price spurt is coupled with the increase in liquidity, reduction in the number of shares. So that way the movement is for a longer period, and moreover, it gives the confidence. It is supported by the confidence that the promoters have shown in their company. Now, how to do a buyback? When we talk about buyback, what are the regulatory provisions involved there. When we talk about a listed company, Companies Act is the mother section, Mother Act, we have to comply with it. And SEBI buyback regulations are there wherein we have to comply with. We have to remember one thing, that Rule 7, the share capital and debenture rules are not applicable in case of listed companies. As per the buyback regulations, there are two basic modes of coming out with a buyback. One is tender offer route from the existing shareholders. The other is open market. And the third one, which is mentioned in the regulations, but is virtually a redundant concept these days, buyback through the odd lots. Open market can further be divided into two parts, via book building and through stock exchange. Via book building, we haven't seen even a single case which has come by via book building. So the two modes being followed are tender offer route or through the stock exchange open market route. 90% or rather 90% of the offers come through the tender offer route instead of the stock exchange route. Now, why this tilt in favor of the tender offers? In case of tender offer, the shareholders have to bid, whereas in case of open market, it is through the stock exchange mechanism. The major difference between tender route and open market route is promoters can participate only in the tender route. They cannot participate in the open market route. Record date is needed to be fixed in the tender route, but in the open market route, record date is not needed to be fixed. A major difference, price, which is the important aspect, price is fixed price in case of a tender offer route, while in the open market, it depends upon the running market price. Obligation, there is no obligation to complete the offer in case of the tender offer route, but in case of open market, whatever amount we have earmarked for the buyback, at least 50% of the same must be utilized, then only the offer can be closed. So if the offer size is 100 crores, at least 50 crores once utilized, then the offer can be closed. Duration, which again plays a very important role in deciding which modes to choose. Tender route remains open only for 10 working days, and the open market is open for a period of 6 months. Unless once the above mentioned 50% is achieved, it can be closed earlier as well. Now, quantum of buyback. This is covered in both the Companies Act as well as in the buyback regulations. For a buyback up to 10% of the paid up capital and reserves of the company, it can be done by virtue of a board resolution. But if anything more than 10% is proposed to be done, a special resolution is also needed to be passed. But herein again, there is a cap that not more than 25% of the paid up capital and reserves can be utilized. Maximum number of shares that can be bought back is 25% of the paid up capital of the company, which in case of open market buyback is limited only to the extent of 15%. I'll not be covering the timelines in detail, but by and large, a tender of buyback gets completed within a period of 3 months from the date of the first board meeting. We need to have SEBI approval as well for this. And open market buybacks, by and large, is a process of 6 months, unless the 50% of the earmarked amount is achieved and the company decides to close it before. In case of open market, SEBI approval is not required. A letter of offer is not needed to be circulated. But herein, a daily reporting, in case of open market, a daily reporting to SEBI goes from the company's side. In case of unlisted companies, Companies Act is applicable. Companies Act share capital and debenture rules are also applicable. And in case it's a PSU, then the DPIM guidelines also play an important role. DPIM guidelines, PSU can be listed company or an unlisted company. So PSU, accordingly, DPIM guidelines would come into play. Now, a benchmark question which arises is which mode to choose, or how to decide upon that we want to go through a particular route or particular mechanism. So if the object is tax in terms of taxation in the hands of the shareholders and in the hands of the company, simultaneously returning of value to the shareholders, simultaneously to see the impact on the financials of the company, plus impact on my ratios, plus optimization of my capital structure, then buyback will come into play. On the other hand, if the object is only to return value to the shareholders and rest of the things are not there, then of course dividend dividend would be the appropriate corporate action. One thing which I read somewhere in one of the letters by Mr. Warren Buffett, buyback is beneficial for both the leaving and the staying shareholders. The leaving shareholders get the value for the shares, and the staying shareholders value is increased by virtue of improvement in EPS and all other financial ratios. So this is what was there from my side with regard to buybacks or dividends. Thank you so much. Now I'll request our corporate colleagues to share their experience.
So thank you, Anjali. Thank you for giving this. Some few questions on taxations are there that we'll cover in the question answer. So Samit, now over to you. You have done buyback, you have experience, you have a knowledge also. So what is your take on this issue, and some insight you can tell us? Over to you.
Thanks, Pawanji, and thank you very much at the outset. Thank you very much for inviting me for this event and this wonderful webinar. So I think it's basically a very, very strategic decision for every industry or every organization to take. So 2-3 things generally people keep in mind while you decide whether to go for buyback or go for dividend. Definitely, one of the factor is that when there's a lot of cash available in the organization, definitely you would like to return the cash to the shareholders, and you like to maintain your dividend ratio also at the same time. So sometimes it happens is that your dividend ratio you like to maintain, but you want to increase your dividend ratio, and there is a dividend policy available there. So, and there is enough cash, so one think of paying it through the buyback also. And particularly, I have seen that wherever the organization have realized that their share is undervalued particularly, and it should be a little bit overvalued, then they generally go for the route of buyback. And invariably, we have seen that the moment the buyback happens, the share price start going up. In some cases, it has not gone up, frankly, but generally we have seen this is the trend. So it's always beneficial. As Anjali was rightly saying, that it's always beneficial, for the going shareholders as well as for staying shareholders, because now it's up to shareholder to take a call whether you want to go to the buyback route or you want to stay, because if you're staying back, then also you'll be getting some more value because the EPS increases, and the other ratios also increases. So one more factor which I have seen is that in case it also gives a signal to the market, and then the investors and the analysts are very smart nowadays. So you have to be very strategically see what has to be done, because the signal what you are giving to the market is that I have a lot of cash, but I don't have anything to invest. One is that in case you are an IT company, you are a tech company, or you are a company where you have a piles of cash available and that there's no more project to invest in, then of course buyback is generally happens, and buyback is very common in these organizations. We have seen the largest buyback of the country in TCS case. But if you are a conglomerate or a manufacturing organization, generally you would like to avail the opportunities to invest into new projects, and that's where you would like to increase the value of your organization as well as shares value. So investors are smart. They also understand that if you're using your cash into new projects, perhaps tomorrow there will be more realizable value to the share, there will be more value to the organization. So they also say, okay, buyback is not a good option. Why don't you, it's good for organization to invest in other projects. And nowadays, particularly, when we are talking about, and this ESG era, particularly in ESG era, when we're talking about a lot of projects which are contributing to our ESG scores, then we have seen that people, even if they don't have a ambitious project, but still they have an ESG ambitious project, when they say, okay, we can put our capital somewhere where we are going to be more carbon neutral, more emission reduction kind of a projects, or if there is some kind of a wastage or some kind of a things which is available to us, which we are sending somewhere, why can't we use it to put some money and use it into kind of an environmental project or some social project, etc. And that way the smart institutional investors are actually realizing that companies are doing that, and they realize that, and they also tell the investor, they also advise the investor, yes, if the company is actually investing cash in the project which relates to their ESG scoring and maybe for forward integration or backward integration kind of a projects, then definitely today, not today, but tomorrow, the value of the company is going to be increased, because ESG is a factor where you definitely have to have a value. People are giving value to the non-financial parameters nowadays. So therefore, we have seen that tech company, IT company mostly giving cash through buyback, but the organization of a conglomerate nature, generally, if they find an opportunity for a new project or a new opportunity, the investor understand that's a good idea. So I think this is how, in nutshell, I'll brief. But and your dividend policy ratio, etc., maintained, so that you are maintaining your dividend ratio. So you're not giving overestimation or over expectation to your investor also. So that's another strategy that whenever once in a while you have to go for a buyback.
Okay, thank you, Samit. Thank you very much for your point of view. I'll come back again for your.
Sure.
Yeah, Poonam madam. So what is your advice to all, what you have experienced, and what is your corporate strategy?
Thank you, Pavan sir. We have seen a very good presentation by Anjali, and which has given a very detailed outlook on dividend versus the buyback, what is the best way and how CFO and company secretaries along with the board should be able to think nowadays for considering the dividend or the buyback. So dividend versus buyback, they both are, indicative of the company's will to make use of its available funds and thereby enhancing the value for the shareholders, whether it is short term or long term. So both buyback and dividend options are a way of rewarding the shareholders. So dividend option is generally good for those shareholders who are looking for a regular income. And those who are looking for a long-term gains, buyback options are certainly beneficial. So certainly there are taxation impacts for both these options, which have been explained in detail by Tushar, and which are being discussed before taking any option by the board, before considering any kind of option. So there are some taxation impacts which are to be looked into before taking any of the decision. So as we all know that decisions pertaining to dividend payouts and buybacks are generally taken by the board, considering various factors, both short term and long term, at the back of their mind. And paying dividend can be seen as a traditional way of payment to shareholders, as highlighted earlier also. And buybacks, as you have already highlighted, have gained momentum in the recent past. And this is a flexible practice of returning excess cash flow to the shareholders. So if I talk about Nucleus and my experience, we have been historically a company which is quite regular in payment of dividend to its shareholders. But on the other side also, we have completed 2 buybacks within a span of 5 years. So during both these buybacks, the decision was taken by the board with the objective of allocation of capital and utilizing the cash reserves for seeking a fair valuation of the company stock, and thereby increasing the shareholders' value for a longer term. So as said by Anjali, the buyback is also an indicator of company's confidence in its future, which was really appreciated by the investors and all stakeholders during both these buybacks in our company. So, but on the other hand, investors are smart enough, and a lot of value is given to non-financial parameters also nowadays. So we had experience both in dividend as well as buyback. So both are to be considered both have their negatives and positives, and we have to consider board has to work upon taking into the many factors in mind while considering whether it has to go for dividend or buyback. So I think that that is the way we should look into it.
Okay. Thank you, Poonam. Thank you very much. Samit, before starting the technical and questions, I'll just ask you, the purpose you have brought out your buyback as per the board, as per the market, it has fulfilled or not?
I think yes. When we came up with the buyback, so whatever strategies we had in mind, I think we were quite successful in obtaining those. People have responded very positive way to our buyback also, and there was a growth in the value of the share also, and at the same time, of course, the EPS recovers, and then one side is that the promoter equity also increases a little bit, but at the same time, that is not a major criteria. The criteria was to bring a confidence among the small investor and the retail investor, and of course, we really see a lot of good response, and the liquidity in the market of our shares certainly increased. Share price increased, share price at the same time, and we really got a very positive response. And it was an open offer market route, but within a period of around, I think, 1.5 or 2 months, we were able to got all the kind of money which we wanted, or which they were to offer. So I think we found that it's a very, very positive sign, and once in a while, I think it should be utilized, provided you giving the right signal to the shareholders. And because, as I told you, investors are smart enough, they understand each and everything. Now that is not the era wherein you give percentage of dividend and they understand, oh, so much of the percentage. Now they calculate each and everything कि क्या EPS है, कितना face value है, कितने company के non financial parameters हैं, कितने company के projects in hand, etc. So they take care of each and every parameter. So I think strategically decision one has to really see that what is your objective in mind, and our objective was to create confidence among the investor that your share is little more overvalued. This is, as of now, is undervalued, but you have a lot value of your shares. You want to give it to us. Otherwise, you will definitely enjoy the value of your shares.
Okay. So, Madam Poonam, what is your take on what Sumit has said in your case?
Yes, Pawan sir, it was a very good experience with us also, and we also got a very positive response from the shareholders from the market. And both the times we went through tender route. In the first buyback, the promoters did not participate, and in second, although the promoters participated, but only for a very small amount. So, but we got a very good response from the shareholders, and initially we were in every. There was a question from the shareholders, like Samit sir has said that in IT companies, this is a phase so we have already been a cash rich company and cash reserves. So there was a question in every conference call, or whenever the promoters or whenever the top management was there to answer. So that what are you doing with the excess cash reserves? So one of the one of the way of returning the value to the shareholders is buyback. So the board decided and board deliberated on that, and then yes, this is a very it is a positive way of returning the value to the shareholders. So we did that and we decided on that, and we got a very positive response.
Okay, Samit, why you have brought out tender route, not the open offer?
No, we went for open offer. Actually, didn't go for tender.
Why you have not decided on tender route?
It was. One was that our promoter didn't have an intention to participate in the buyback, frankly. So in tender offer, that's another opportunity or availability of facility that you can do that. But the other thing, when we discuss with our consultants and merchant bankers and brokers, and then looking into entire scenario, that how do we go into the market and what should be the best way of boosting the confidence of investors. So I think we were given an advice to go for an open offer, and frankly we really liked that, the way we were doing daily trading and all. I think it was really fun also at the same time, doing buyback from open offer.
No, madam, the tender route is allowing promoter, and both the time you have done with the tender route. So what is your take on this issue, that because promoter wanted to join or promoter wanted to take advantage or some other reason?
No, sir. As I said, that in the first time the promoter did not participate at all. Although he was allowed to participate, the promoter did not participate at all. And both the times we were doing the buyback to the extent of 25%. So at that, for that we had to go through tender offer.
Okay. So Anjali, what is your take on the tender route and the open offer? When promoters are talking, you must be giving presentation for both the things. So what are the major reason that people are deciding on tender route in the market?
So in our experience with almost all the companies, the first question that comes to their mind or the promoter's mind is whether we can participate or not. And rather, we are the ones, we also ask the same question in case you want to participate or not in the particular offer. If they do not want to participate, then we have both the options available with us. But as Samit said that although law is mandating for 6 months period, but generally what we have seen is that the open market buybacks are getting completed within 2 to 3 months itself. The companies are able to receive the number of shares which they have earmarked. So companies generally, but anybody who wants to tender, any promoter who wants to participate, for them the only option is tender route.
Okay. I mean, there is a market analyst, they talk that if you are going for open market route, then you can maintain price also. So how far it is correct?
Yeah, so I think in the open market route, there is one advantage is that, you can buy at your own, depending upon the pricing. So you can always take advantage of the, sentiments of the market, I would say. So, sometime you generally say, okay, let's hold on for a couple of days and let's see, how our share react, depending upon what kind of news are there, some policy change, some other things. Suppose, there's a downward trend. Okay, we say, okay, well, let's start buying it. And then there's highly upward trend. Okay, let's stop for a couple of days. So maybe, this is something where you can actually take advantage of, volatility of market and sentiments of the market. Plus, at the same time, shareholders are also, they feel satisfied. Okay, no, I have sold it at the market price, whatever the market price was available at that particular day. So he can always stay, he can, stay, wait, then sell. So it all depends. It's all, but I think, I really enjoyed, working on buyback through market route. Frankly, this was a real good exposure and good experience.
Okay. Okay. Now I have a few questions. Anjali, you tell me what is the thin line difference between open market through buyback through open market and the manipulation in the market?
So there definitely are chances when Samit used the word advantage. That's what I was thinking. When advantage can be both ways. So there surely is a chance that you can manipulate the market and simultaneously you can do a buyback which goes in your favor being a company. So one has to be very cautious as to at what price, or there should not be any manipulative activity which happens.
I would not say, frankly, I would not say it's a manipulation, no way of manipulation, but yes, taking advantage of, sentiments of the market, of course. And, you can always decide that what quantum to be taken today, what quantum not to be taken today, and, at what price. So I think I don't see any room for manipulation here, because I have never, thought of that, or maybe, heard of that the manipulation is happening in buyback, but I don't know about it, frankly. But yes, you can always take advantage of a lot of other things, actually.
No, you are right. You're right, Samit, because when you trade in the market and that control is with you and you can do, that's the advantage.
Yeah, yes, up to some extent, yes.
Yes, okay. Now I have the query session. So first query, I will start with Anjali. First buyback was completed on 31st/3/2021.
Sir, you will have to be a bit louder.
Okay. First buyback was completed on 31st/3/2021.
Okay.
Second buyback is proposed in 31st May 2022 after 1 year of first buyback.
Right.
The buyback price is being determined based on the provisional balance sheet as on 31st/12/2021, which is within 1 year of the first buyback. Is it compliance of the buyback rule?
No, buyback regulations say that you have to take the audited numbers, whatever latest audited numbers you have available with you. So when you talk about 31st May 22, if your audited numbers for March 22 are available with you, you have to take those numbers. On the basis of provisional, you cannot proceed with.
But I can do the auditing of that provisional number.
Yes, then we can proceed. We need the audited numbers.
Any other person has different view? So anybody has a different view, just raise your hand. So I will ask you. Okay. Should secretarial audit qualify his report if surplus in PL and account are used for buyback of shares? Because surplus in P&L account does not come under the definition of free reserve, and it is commonly used by all companies and not objected even by statutory audit. Samit, any point, any view on this?
No, I don't think so that it's a matter of qualification, frankly, but if anybody has any other view, maybe Anjali.
Anjali,
No, sir. There is no reason for any qualification in this.
okay. Poonam, you have any point?
No, I don't think so. I think we are clear that there should not be any qualification on this.
A second, Anjali, second provision of 68(2) states, provided that in respect of the buyback of equity share in any financial year, the reference to 25% in the clause shall be construed with respect of its total paid up equity capital in the financial year. Can this be explained by way of example?
So if as on 31st March 21, my paid up capital was say 10 crore rupees, during 21-22, I have made some preferential allotment or a rights issue by virtue of which the paid up capital has increased to 12 crore. So then I have to see the numbers with as to 25% for calculating 25%. I have to see 1 crore 20 lakh as the number of shares which are available, and not the capital which was there as per the last audited balance sheet.
So as per
So while computing, there is a difference. While computing 10% or 25%, we have to see the thresholds as per the last audited numbers. But while computing the numbers that are available with us, we have to see the latest numbers.
So threshold is that was the expert the bank asked, but what I can offer it is on the latest number.
Yeah.
While calculating unsecured debt, should any statutory dues or contingent liability be considered to arrive the prescribed debt ratio?
Debt equity ratio mein unsecured loans would be a part of it. So while when the law talks about that debt equity ratio should not be more than 2:1, unsecured loans would be a part of it.
What will be the date of completion of buyback, the date of the payment of, or date of the extinguishment of cess?
It will be the date of payment.
Any different view?
No, I think it's the date of the payment, I think. Yeah.
Okay.
Extinguishment is a subsequent activity.
After buyback of share within a year, can we go for a strike of the company?
Poonam madam.
Very interesting question. Very interesting question, but I'm not sure. I think Anjali needs to answer that.
So no restriction, but when we give a declaration of solvency, we say that during next 1 year, the board has looked into that the company will not go insolvent.
Right.
Yeah.
Okay.
No, insolvency, it's not an insolvency, it's a striking of the company.
But sir, then striking off has to happen for some reason, no? As to there must be
voluntary winding up also, no? So I can, if I'm going for voluntary winding up.
No restrictions then, no restrictions.
So legally, legally there's no restriction as such, but you're right that, once we are giving a declaration of solvency, and so we are giving confidence to the shareholders and the regulator that we will be continuing for another year. So I think it's not advisable to get a strike off unless there is some statutory reason or some other reason.
Okay. Basic buyback of shares when CRR is created, whether this CRR can be later after 12 months, utilization of capital reduction purpose instead of issue of bonus shares. Anybody? Basic buyback of
CRR can be utilized only for the purpose of bonus issue. Reduction of capital, I am yet to come across any case wherein CRR has been used for reduction of capital.
But I think it can be used, so far as I know, that it can be used for reduction of capital as well.
Okay. Poonam madam, can promoter participate in buyback offer?
Yes, they can participate.
Acha, can promoter bid more or less than the number mentioned in their intent letters?
I think they can bid more, but they cannot bid less. If I'm correct, Anjali?
No, it's other way around.
Huh.
Because they give the maximum
Cannot
intention.
go more.
Yeah, they cannot go more
Huh,
than.
they cannot go more, but they can
They
go
can bid
less.
lesser.
Yeah.
That's approved.
Poonam madam, one more question connected to this. My promoter have given non-disposal undertaking to banks. Can such shares be tendered in buyback?
No, non-transferable shares cannot be tendered in the buyback.
Any example you have, experts?
No, an example to nahi hai, but yeah, this is very sure that this kind of a lien, because the SEBI has
Yes.
recently very clarified that even non-disposal undertaking should be taken as a lien, and then we have to give this kind of a declaration. So I think they have clearly said that the lien includes non-disclosure undertakings, and any share which are lien cannot be tendered for buyback. So
Anjali, there is a buyback of ESOP shares that is now prevalent. Can option granted under SBEB regulation be brought back?
Sir, SBEB regulations do talk about grants to be bought back, but there is no procedure prescribed for it. And even in the buyback regulations, the definition of specified securities covers the grants, but neither the buyback regulations nor the SBEB regulations have mandated any procedure for the same. So we are yet to see any particular case or any clarifications to come from SEBI's side as to how the grants can be bought back.
But what is the problem, grant? If they can write in the terms and condition and they can give the offer, and which can be exclusive.
But to see, tender route will not be possible. I mean, both the mechanisms, tender route or this thing, the open market route. Because
okay, suppose this is a listed company.
Okay.
They have given us off.
Then it's possible. I think many of the fintechs and many of the startups are doing that.
Okay.
Yeah.
Can grant letter be issued to employee during the 1-year restriction period?
Yes, they can be. Because it is not further issuance of shares, they can be.
Okay. In the ESOP, through the trust route, can be exercised transfer of shares upon grant exercise happening during the 1-year period?
I didn't get the query.
In an ESOP, through the trust route, can be exercise transfer of price upon grant exercise happening during the 1-year period?
Yes, I think because in case of a trust route, the allotment has already been made to the trust. Then once an employee exercises, he's merely being transferred those shares from the trust to his demat account. That is possible. Okay. It will not fall within the ambit of fundraising.
In case of listed company, can we do buyback of ESOP without conversion into shares from the employee, or do the employee have to first convert their ESOP into shares and then only those shares can be brought back?
I think, as I mentioned, Abhi, there is no clarity as to how the grants can be bought back. So Samit, presently, to ESOP shares, grants have to be converted.
Samit, have you?
I think Samit or
no, I think it has to be converted first in my view.
Yes.
Do you have ESOP in your company?
No, currently we don't have ESOPs, but I have read that they have to be converted into shares first, and then only they can be bought back.
Okay. Can we do buyback only from employee to the exclusion of the other shareholders? Anjali?
No. Negotiated buybacks are not allowed. In case of listed companies, they are not allowed.
Okay. Can during the 1-year restricted period ESOP already granted be exercised?
I don't think so, because you can only give grants, but you can't exercise the grant.
Right? Can't exercise, yeah.
Okay. Poonam madam, if promoter holding crosses 75%, then what are the implications?
So if it reaches 75% threshold, then it has to be brought down within a 1-year time, which is given in the regulations. It has to be brought down.
90 days or 1 year? Is it?
1 year.
1 year, okay.
Anjali?
SCRA talks about 1 year. 90 days, Samit, is with reference to the takeover regulations.
Okay. Oh, I see.
Yeah.
Can promoter vote on buyback resolution in a board meeting or the shareholders meeting, madam? Poonam,
No.
madam?
No, not allowed. And if they vote, the exemption will not be available to them.
But the only condition is that they'll not get the exemption. Otherwise,
Yeah.
there's no
Otherwise, they can vote, but the exemption will not be available
Correct.
if they vote.
Which exemption you are referring?
Under takeover regulation.
takeover code, wali, sir.
Okay. Okay. So next is in pursuant to buyback, promoter holding breaches 5% threshold. Will the promoter have to come out with open offer, madam? As per SAST?
Not necessary. Yeah.
Yeah, that's where I was saying that, if you have an exemption provided, number one, your promoters have not voted to the buyback resolution. Number two, there's one more condition, I think. One, the promoter have not voted. Number two, you must have done, I think,
Ballot.
postal ballot also, right?
Yeah.
Postal ballot. Then there's an exemption available.
So more than 5%, suppose I'm crossing 25%, is it possible? In the same logic, if promoters are not participating and the company promoters are holding 40%, 60% public, and the promoter holding is increasing by this buyback, say 25%. Is it possible? I'm just taking a
Yes,
case.
it is available in the regulation 10 of the SAST, but there is a condition to pull down the shareholding back within 90 days.
90 days. Yeah, that's where I was saying. 90 days mein aapko wapas lana hai.
So in what process you can do? The same, it is applicable 40A or some other process? How to bring 90% within 90 days?
This has to be done. Yes, ma'am.
No mechanism has been specified. Like for offer for sale, if the promoter holding breaches 75, then the modes have been prescribed. But for complying with the 3.1 and 3.2 of takeover regulations, no mode has been prescribed.
Okay. In a buyback, what happened to the fractional shares? Anjali?
I think Tushar can answer this better.
So the fractional shares, what we when we accept the bids in the bid round, so it happens into the rounds. All the fractional shares against that, if we have any shares left in the kitty of the buyback, we allot one share to that person. Proportionately, this is to be done.
Okay, Samit, my listed company has announced dividend policy. Can we declare a bonus instead of declaring dividend? Will it be non-compliance of listing regulation?
No, I don't think so. It will be non-compliance because it doesn't say that bonus policy, dividend policy is not something which is statutorily you'll have to give a number or something. But yes, more or less it should be in the range of dividend policy what you are applying. But there's no non-compliance strictly.
Okay.
But sir, bonus guidelines, bonus regulations talk about that bonus should not be declared in lieu of dividend. That is one thing which.
So we are not saying it's it. Yeah, you're right.
It should not be in lieu of dividend. Yeah.
Okay.
That's where a catch is. Yes.
Poonam madam, can the shareholder bid for more than the entitlement?
Yes, they can bid more than the entitlement.
Okay. Can the shareholder bid a higher price than fixed by management in a buyback offer, Anjali?
Can the promoters?
No. Can a shareholder bid a higher price than fixed by management in a buyback offer?
No.
Okay. If a market price falls below the buyback price, can the company revise buyback price, Tushar?
So revision of buyback price is possible, but in a due period of time.
Samit, what do you feel? The buyback price can be revised in such a manner?
Sir, I think in one of the route it can be revised. I don't remember which one is that, frankly.
Okay, Anjali?
Actually, sir, the price we fix is the maximum price. So upward revision is not possible. Though, in my opinion, it should be allowed because you're talking about a better value to the shareholders. But there was a particular case, I think E-Clerks or something, I'm not very sure about the name, but they revised their price downwards.
Okay.
So
By the time they went to the shareholders, the market price had changed, so they revised their price downwards.
Okay.
So that situation is also there.
Poonam madam, you have any point?
I don't have any point in this.
Sumit, is the present falling market is buyback is an apt strategy?
Buyback is, sorry?
Buyback is the right strategy?
In the present market situation.
Sir, it's always, there's a lot of other factors to be taken care, frankly. You really can't say that only the market is falling that you go for buyback. So a lot of other things has to be taken care. But yes, generally, you only not decide on this factor. But yes, up to some extent, I would say yes. When the market price is little low, buyback is always advisable or it's good.
So I think in addition to it, what we have seen during COVID time, 2021, why the number of buybacks increased, because companies wanted to convey this message to the shareholders that they have confidence in their
Right.
company
Right.
and they should not be they should not get confused because of the lowing
Correct.
market, falling market prices.
And to give a
same-
confidence that we are always there for you in
Yeah.
case you still
Same
don't have
applies
a
today as
confidence, give
well.
it to us.
Yeah, same applies in the today's market as well.
Sumit, a very interesting question has come for you. Private company, 2 shareholders, family member, husband, wife, 80-20 shareholding, huge reserve build up over the period of time. Paid up value is small, say 10,000 shares of 10 rupee each. Now, when they want to buy back, since huge fund is available, the value of share is very high. Say rupees 10 per share is in thousands of rupees. Does this high value in which share is brought back could be a question, or is there any restriction on the value up to which only buyback can be done? So what is the view?
I think Anjali, you are the right person to speak on this.
So there should not be a concern. There should not be a concern. Buyback regulations, so that is what the main premise is, that you are returning value to the shareholders, whatever be the value.
Buyback is talking about the reserve, the capital and reserve combination. So when they are talking about the huge reserve, yeah, huge money is there, that will be part of your cash reserve. So 25%, up to 25% you can go for a listed company. So that's why there is no reason with connected with the high value. If the share price is say 10,000 rupees capital, but 2 lakh rupees or 5 lakh rupees or 10 lakh rupees is a reserve. There is not any basis. You can do it.
Looks like, yeah.
What is a shareholder in NRI and tax treatment for them in case of buyback as well as dividend? Tushar?
Tax expert बताएं.
So the tax has to be paid as per the provisions in their country also, and tax is to be deducted as source in our country.
Okay, can you just tell me, can buyback entitlement be renounced to other shareholders or automatic entitlement to promoter as in the case of right issue process? But right issue में भी ऐसा नहीं है. You have to explain पहले. So somebody is asking this question. So I'm just saying.
No, it's not allowed.
No,
That's an interesting scenario.
Okay. Okay. A company has done the audit of 2022 and the balance sheet will be signed in October. Can we use the same for buyback, or we have to prepare an audited balance sheet not older than 6 months? Anjali?
No, so March 22 financials can be utilized.
But
We don't have, there is no requirement of having a fresh audited balance sheet.
But balance sheet is signed in October.
Even then, sir.
Okay.
Yeah.
For the computation of limit on the amount available for buyback, should the company take into account the consolidated financial or standalone financial?
Standalone लेना चाहिए मेरे से. I think I would go for standalone.
So both have to be taken. Rather, lower of the two has to be taken as the limit for while deciding the.
In case consolidated even less,
Yeah.
I think lower should be taken. Yes.
Okay. How to fix the record date for buyback, Anjali?
How to fix the record date.
Yeah.
So once we get the SEBI approval, in case of tender offer route, once the SEBI and observation letter is issued, then we fix the record date. In case of open market, record date is not there.
Yeah, there's no need for record date.
Okay, very interesting question, Poonam madam or Samit. That is, shareholders not interested in holding shares. and want to surrender it without any consideration as it has negative valuation. How and why the company can take back the shares? So this is open question to all because it's a complicated. So suppose my value is minus, okay, and I want to, because I'll not get anything, and I want to surrender it. So do you think it is not in the law? Do you think this point should be considered by the regulator?
No, I don't think, because it depends. Number one, whether it's a listed entity or it's a non-listed entity. Important है उसके लिए तो. And अगर ये non-listed entity है, तो I don't know what kind of a deal he can get into, with the promoters or with the owners. But in listed entity, of course, there's no such provision for this kind of a thing, this kind of a deal.
Okay.
And otherwise also buyback can happen from the free reserves or the general reserves. So if the valuations are already negative, then how will the shares be tendered or bought back?
Anjali, in my opinion, because negative valuation is there, so the company doing buyback, they don't have a reserve also. So how?
Right.
So I think this is one situation which people are saying that I just want to surrender. I don't want any money.
Okay.
By doing this, I think law is silent on this. There should be some procedure in this way. So there is a possibility by surrendering your shares, company's balance sheet may improve because equity will dilute and the number of shares will reduce. So there is a possibility. So something should come out. So you note down this point. We will refer it to the regulator.
Yeah, as of now, there is no such provision there. We can surrender your share actually.
Tushar, the capital gain taxation is not considered in your legislation, which impacts all shareholders.
As we mentioned in the PPT, capital gain is not applicable in case of tender offer route and in case of open market buybacks. So the portion gets into the buyback is not taxable, but the other portion, if you have gained anything from the selling, you have to pay capital gain tax.
Okay, Anjali, understand buyback through accumulated profits will be treated as dividend payout and thus taxable in the hands of the shareholder since 2021-22. Please confirm.
It will not. If it is dividend, then it will be taxable. Dividend will be taxable, sir.
Tushar, you have any point? Samit and Madam? Tushar, you have any view?
If it is proceeds from buyback, then it's not taxable. If it is a dividend, then it's a taxable.
Okay, for many regulatory approval, one of the parameters that is considered by the regulatory authority is whether it is a dividend paying company. So should there be combined strategy of buyback and dividend for returning value at the same time satisfy the dividend of dividend paying company criteria? I think this is some view somebody has given. So you have to, if you do buyback, there's no compulsion that you have to pay dividend. If you are paying dividend, there's no compulsion that you have to do buyback. So dividend and buyback both are different and can go together also, then go independent also. Am I right, Sumit?
Yes, sir.
Right.
Okay. How buyback tax calculator receipt of money on issue of shares prospective when there has been multiple issue of shares, example, an issue of shares at par, followed by right issue, issue of shares of the premium, then bonus issue, then right issue, then follow on the public issue. Anjali.
Yes, sir. Tax has to be calculated on the basis of FIFO method, wherein if I'm buying back say 10 lakh shares, out of those 10 lakh, if 8 lakh were allotted in my IPO, whatever was the issue price in the IPO, that will be considered in respect of 8 lakh shares. Then 2 lakh shares, if I came out with a preferential allotment, whatever was the issue price for the preferential allotment, for 2 lakh shares, that will be the issue price. So we have to follow FIFO method for computing the tax. And Income Tax Act provides a detailed provisions as to if a company has been incorporated by way of demerger, then what will be the way of computing the issue price in case there has been a bonus issue in between, what will be the way of computing the issue price. The section gives detailed.
Okay. There's one question which I'm asking Poonam Madam and Samit, though we have discussed, which option of buyback is usually considered better, tender route or stock exchange? So Samit is for stock exchange, Madam is tender route. So please tell. Samit, you tell the advantage of stock exchange route, and Madam, you tell me about the tender route.
So I think in the tender route, the one thing is that you have to fix the price, whereas in the stock exchange route, you only have an upper band. You can always buy the shares at a lower price also if there is an opportunity in the market. And the disadvantage of market route is that it really goes longer generally. And tender offer is generally, you finish in 10 days and then you are able to decide, So, so I think there are different pros and cons for both the routes. Generally I have seen people decide for tender route so that, they fix a price and then they say, okay, whatever is to be received, pro rata we can do. And it doesn't give you any kind of a suspense or, anything which is, it happens in market route sometimes that even up to 6 months, you don't get the 50% of the amount, then the buyback fails actually also. So that is another disadvantage of the tender route. Both also offer route.
Madam,
Yes, sir. As Samit has already explained, that tender route has its own advantages of time and as well as the price fixation. So once the price is fixed, it's there for the shareholders, and generally it is beneficial as for the time purposes, because tender route has to be open for 10 days maximum, and open offer goes for a long period. So basically, if you want and promoter participation also is one of the criteria for deciding both the things. So that is it. Both has their own pros and cons, but definitely I prefer tender route rather than
okay.
open offer.
In a buyback from
So one additional thing, one negative thing which we feel can arise from the promoter's point of view, in case of open market route, in case the amount is not utilized within the 6 months period, the 2.5% of the buyback size may be forfeited by the merchant banker. Unless there are certain exceptions to it, but otherwise law prescribes that this amount can be forfeited.
But there are certain conditions, I think.
There are exceptions to it, yes.
Okay. In a buyback from open market, how will the shareholder get to know, Samit, that his shares have been sold under the buyback offer? Or
I think there is only one that is in the application.
Yeah, Tushar, you can give.
Yeah, actually there is a procedure that exchange will identify these transactions. If, for example, in our open market buyback, I sells 100 shares and 80 goes into the buyback to the company and 20 goes to someone else. So I get a message from the exchange, and exchange has this mechanism to identify that these many shares were bought by the company and these many shares went to other person, so that I can also identify what is my tax implications.
I think something is reflecting also at the
yes, there is a strict mark.
Yeah.
When the company is standing for buyback on exchange, so the strict mark comes on it. NSE does not follow this practice, BSE does.
Okay. Whether employee or director, including KMP of the company, can tender their shares in the buyback through stock exchange mechanism? Samit, is it possible? Whether employee and director, including KMP, not the promoter.
Promoters and person in control cannot, but
Directors in KMP, yes, they can tender their shares.
They can, yes.
Okay. In open market buyback, if shareholder do not tender any shares during the 6 month period of 50% of it is not attained, what is the consequence, Anjali?
As I mentioned, that 2.5% of the amount can be forfeited by the merchant banker. There are exceptions to it, but still that restriction may happen.
And it will deposited where?
With the bank. With the bank.
No.
Sir, it is not written. Where will it go? Where will this money, this forfeited money go?
Protection fund?
It should go to investor fund only.
Investor fund.
Okay. Now there is another question which we have received. By virtue of buyback, what will changes happen in company's balance sheet? Tushar, you can tell.
Only changes will be the accounting changes. the reserve side will reduce, the cash will reduce. In the liability side, the CRR will increase. But these are accounting changes. The big time impact and which are considered for these buybacks are the impact on the EPS, impact on the return on equity, return on net worth. And many companies consider this factor for doing their buyback because a company with higher EPS, higher return on net worth is attractive in the longer term. And these factors support the price of the company in longer term.
Okay.
And also you have to give the details in board report or maybe notes to accounts, and also in accounting you have to show separately the the shares extinguished through buyback and all, I think.
Okay. Madam, will a buyback put a restriction to the listed company's future fundraising ability? Because you have done 2 buybacks.
I don't think so.
So first of all, you have a fund. That's why you are sharing.
There is a 1-year restriction that the company cannot raise any further funds during next 1-year period from the previous closure.
Okay.
Okay.
Which I think should be, this provision should be relaxed. I am not able to understand that why this 1-year restriction should be there, but in the present regulations it is there.
Yes, basically to say that we have enough funds to distribute to the shareholders, not that you are not in a position that you don't have a liquidity and you are going for a buyback. So
okay, Anjali, how can capital reduction reserve that is created in a buyback be utilized?
So generally utilized for the purpose of bonus issues, but as there was a question earlier as well, and we discussed probably for capital reduction as
well. Okay. So, how do NRI shareholder participate in buyback?
So your voice is breaking. It's not coming clear.
You're
Tushar, are you
frozen?
My voice is okay now?
Now it's okay.
Now it's fine, yeah.
Tushar, how do NRI shareholders participate in buyback?
Unmute, Tushar, unmute yourself.
Sorry. All the shareholders has to apply to the stock exchange mechanism only. And the NRI shareholders can approach their brokers with whom they are having their demat accounts to apply for the buyback.
Normal system, nothing, they should not do any other thing.
I beg your pardon, sir?
They should not do any other extra thing.
No.
If they are NRI, no extra, but if they are foreign national or OCBs, etc., then I think perhaps.
And they have to take prior approvals for
RBI approvals.
participating in the buyback.
Okay, Anjali, can shareholder holding shares in physical from participating in buyback?
So in a tender route they can, but in an open market they cannot.
But in open market also we allowed, I think maybe the rules have been changed or what, because there was a separate window was open for physical. We were allowed to open separate.
In the open market, they are not allowing trading in the market without dematerialization.
Yeah.
But you can always offer these to your broker and then with some formalities, because so far as I remember we had given a separate window for physical shares also, and they have to give it to your broker, and then they can always.
No, Samit, physical mode allowed only on tender route, not in this.
Maybe the rules must have changed now.
Anjali, in a tender route there is a 15% reservation for smallest shareholder. Does it promoter shareholding as well?
Yeah, the regulations talk about the shareholders. It doesn't discriminate between promoters and public.
So suppose I have a promoter has 70% shares, 30% public. So when reservation of 15%, that will be on the basis of 70 and 30 ratio.
Yeah.
Okay.
It will be on the basis of their category. For this reservation, we have to check the category of small shareholder, if that which we decide on the basis of their holding on the record date, which should be less than 2 lakh.
30%. If 15% is after 30%, or it's 100% of 15%.
This 15% is of the buyback size.
Okay.
So
that is covering overall. Okay. Acha. What all regulatory approval are needed for buyback? Anjali?
In case of tender offer route, we need approval from SEBI. In case it's a NBFC, then RBI approval may also come into picture, if provided there is a change of 26%. That's it. In case of open market, no approvals are required.
Okay, Anjali, in our listed company scheme, amalgamation is sub judice. Can we announce a buyback?
No, regulations prohibit it.
Now, amalgamation is taking more than 1 year and 2 years because of the delay in the
Even then, so one cannot come out with a buyback if the scheme is in process.
Okay. Can Samit, can the escrow account be funded by way of bank guarantee?
Yeah, I think up to some extent it is allowed to be funded by a bank guarantee, maybe around 75% or something, or 25% has to be cash. I believe so, right?
Anjali?
Yes, sir.
Okay. Madam, Puna Madam, is shareholders approval mandatory for buyback?
If you are going more than 15%, then it is it has to be taken in tender offer.
Okay. Anjali, can already issued warrant CCD to be bought back?
No, they cannot be. They have to be first converted into equity, then
Anybody has a different view? Okay. Can during the 1 year restriction period CCD warrant already allotted be converted to equity shares? Tushar?
Yeah, yes, sir. Existing liabilities of the company to convert them, promises, they can.
Okay. New equity they cannot bring, but conversion can take place.
That's
Okay. Whether during the 1 year restriction period bonus shares can be allotted, Anjali?
No, nothing.
Even I can't give bonus share.
No.
Anybody have different view? Okay. Whether buyback once announced can be withdrawn, Tushar?
Not after declaring the PA, but before PA it can.
For PA, yes.
Okay. But after PA, any chance, or you have to do it?
After PA, it's not allowed as per the regulation.
Okay.
I think in one of the cases, SEBI allowed it because the market price had gone down.
You need a specific approval for that, basically.
You need a specific
Exemption we have to take under buyback regulation.
I brought out the issue of 500 rupees. The market price is 200 today, so I can ask SEBI and withdraw it.
Sir, infructuous ho gaya. There was one particular case wherein the buyback had become infructuous.
Okay. Can the shares be tendered by DP during the trading window closure period?
DP, it's a designated person. Okay. Can the shares be tendered?
Window close ke time pe DP cannot.
No, Tushar, there is no restriction. Trading window
There is, yeah.
are not applicable
But
on
it is generally advisable. I don't know why it is advisable not to do that, but there is no restriction as
there
such.
is no restriction. In case of buybacks or rights issues, there is no restriction.
This is PIT. Are contra restriction as continued in PIT regulation applicable to buyback?
No, there are no. If somebody has bought any shares during preceding 6 months, he can tender those shares in the buyback. No issue, no restrictions in that.
Can
But the point is, you can't do contra. Acha, okay. You mean you can do the contra transaction in buyback even if it is less than 6 months?
Yeah. Because there is a guidance note issued by SEBI, because these offers are open to all. That is why this restriction is not there.
Okay.
Sure.
Can locked in shares be bought back? Shares are locked in?
No, sir. They cannot be.
Okay. Anjali, any
no, sir. But locked-in shares cannot be bought back.
Any logic?
No, sir. Lock-in means that they will not be transferred till a particular date. So buying back means that you're giving in favor of the company. So the same is not permissible.
Okay. Now there's one question which the regulation to be complied with regard to the valuation for pricing the buyback. Tushar?
So there's no regulation prescribed for valuing the buyback shares, buyback price. It is freely priceable, totally on the discretion of the management and the consultants.
Okay. Anjali, basic buyback of shares when CRR is created, whether the CRR can be later after 12 months utilized for capital reduction purpose instead of issue of bonus shares.
Sir, I think we have discussed it. It may be used.
No. Can be used. The CRR can be later utilized for capital reduction purpose instead of issue of bonus shares.
हमने पहले भी डिस्कस किया ना ये क्वेश्चन.
After the buyback of shares, this is okay. This has been done. For the computational limit of the amount available to buyback, should the company take into account consult? No, this is also done. This is also done. This is also done. Acha. Now, what is the mechanism for tax exemption in case of open market buyback by the company? How will the shareholder know that their share have been bought back in the buyback? Now, Samit, you have done this. I send the shares which you have purchased in a buyback. So 50, say my 100 shares, 70 you have taken and 30 market has taken. So how I will get to know this?
नहीं, वो अभी तुषार ने एक्सप्लेन किया ना सारा जिस तरीके से कि कैसे पता लगेगा अपने को.
So even then somebody has asked this question, so I'm just saying repeat it. This answer.
Okay, so I'll answer again. The exchange will identify your trades. They have established mechanism for this. So if you sell 100 shares and 50 has gone to the buyback to the company and 50 has gone to someone else, so the shares have been bought back by the company will be identified and a message will be sent to you. And this was done pursuant to a mandate given by the exchange circular, and so that you can compute your tax implications and claim your exemptions for the shares went into buyback.
Okay. Anjali, will the paid up capital to be reduced to the extent of buyback capital? Tushar? Suppose I am doing buyback, my capital is 100 and I am bringing out say 15% shares. So the capital will be reduced now because shares will be extinguished. So it will be called capital reduce or it will be through buyback. So capital reduce will not be treated.
It is in a case the capital is getting reduced, but we don't follow the capital reduction process. We just do some filings with the ROC. And the capital gets updated with the records of ROC.
Samit, the buyback entitlement of the promoter interest was increased, decreased, modified by SEBI at the promoter request in all the 4 buybacks by Wipro within their total entitlement, because Wipro's buyback is always in limelight. So you have any call on this?
No, sir, I'm unable to comment on that. Anjali, maybe you can.
Tushar, you can give. Anjali, you can give the answer.
So in fact, this is something new to me that this intersay has been allowed. To my understanding, again, you have to apply to SEBI for exemption if you want any such thing to happen.
Okay. Will paid up capital be reduced by a point pe you want to say anything, Anjali?
Sir, there was an urgent call. I could not take that question. Please repeat.
Suppose the 100 rupees capital.
Yeah.
Tushar has mentioned, you have any different view? So 25 you have bought back.
Yeah.
75. So it will be treated as capital reduction or it is treated as something different? Because capital will be reduced.
Capital will be reduced, but that is not capital reduction. It is buying back.
Okay.
Even in the form it will be bought back capital.
The consideration for buyback exceed the paid up capital, but it is less than 25% of capital reserve. What is your view? Suppose I have a capital 10 and reserve is 100. So 110. So 25% if I'm bringing out. So suppose my shares is coming out 30%. Okay. Or some reverse. So what is your call?
Number of shares bought back cannot be more than 25% of the present capital number of shares.
Okay.
With no approvals also. The approvals are for the aggregate of the paid up capital and reserve. The number of shares cannot be, it's prohibited. Cannot be more than 25%.
Any different view?
No, sir.
Okay. If the company is in a sector where the restricted FDI regime and the promoter is a foreign body corporate, can a buyback or bonus issue can happen without RBI approval? The answer is because FDI regime, the promoter has to take, and the promoter is a body corporate, that they have to follow RBI guideline. But buyback is not a problem. But you have to follow the buyback. After completion of buyback, restriction is only on further issue of shares, etc. But issue of bonus share is permitted within the period of 6 months.
So that's under the Companies Act. In case of unlisted companies, that is permissible. But in case of listed companies, it is clearly mentioned, including no further issuance, including by way of bonus shares.
Okay. So this is mentioned in 68.8 or this is mentioned in the...
It is mentioned in 24, regulation 24 of buyback regulations, SEBI buyback regulations.
Okay. Can pledged shares for trading margin be surrendered for buyback? So somebody has given a trading margin, okay, and that is with a broker, and that is pledged also. They can surrender it for buyback.
If the shares are freely transferable as per the pledging mechanism they are following with the broker, then yes. But if there is any restriction, so they are not.
It means the broker has taken for the trading margin and pledged these shares. So if
the broker has to release that. Broker has to release that.
Broker has to release them.
Or they have
It
a
should be
agreement
free.
where the investor is authorized to.
Once they are free, investor will be authorized to participate.
Definitely.
He has to release the pledge and then they have to do.
Yes.
Yes.
How one person is asking the bill paid up capital be reduced to the extent of buyback? This is one question, and repeat question. Next question is how it is being reflected in balance sheet. So accounting, how you are showing?
So we have to show a separate line item, the shares bought back,
Okay.
and then it has to be reduced. Capital has to be reduced.
So my capital is 100. I brought out 17%. So I will show 100 minus 17.
Less bought back, and then the share capital. Yeah.
Okay. Attention is invited to para 6 of the report of the Parliament Committee dated 21st March 22 that has recommended to the government amendment to the provision of section 68(3) of Companies Act so as to make it clear that companies can buy back up to 25% of paid up share capital of the company plus its reserve and surplus. As the Parliament Committee felt that section 68(3) presently read with its provision restrict the buyback to merely 25% of paid up capital and reserve are not included for payment of consideration for bonus or for buyback. Is it right statement, Anjali? He is saying that present law does not say paid up capital plus free reserve. So I think it is always there when we calculate.
I think it is there even in the present regulation, present section. It is there.
Yeah.
But he is saying some learned authors have opinion that recommendation is uncalled for and its free reserve are to be included for buyback.
That is what we are saying. So that this really may not be called for, because otherwise also section 68 clearly says paid up capital and free reserves.
No, but what is the present situation? He is suggesting there's a confusion going on. Parliament Committee report is what they are saying. They are saying the Parliament Committee having highlighted the error in drafting, then companies processed the buyback proposed without waiting for change in law. Then through number of shares brought back is less than 25% paid up capital, the consideration of buyback exceed the paid up capital.
Maybe Anjali can reply later. I think you can understand the question.
This Monday you can send it separately. There's a confusion in your query because both the things you are saying. So just please tell us the consideration for buyback. Yeah. Now, can locked in shares be bought back? This is Anjali.
You have already answered.
No, already answered here.
But any process where you can follow this?
Sir, unless the lock-in gets over, there are two kinds of lock-ins. One is say lock-in hoga kyun? Agar main isko background mein jaun, lock-in will happen if I made a preferential allotment. So my entire pre-pref holding will go in lock-in for a period of 6 months, and the fresh allotment will go in lock-in for a period of promoters ke case mein 3 years. So till the time my lock-in gets over, I cannot tender my shares.
Shah, from the income tax point of view, how will the shares price be computed in case of company has multiple allotment in the past? There will be different issue price for each of shares allotted.
So we have discussed this query.
FIFOs to be followed.
FIFO method to be followed. Yeah.
FIFO method, but how to calculate?
तो जितने शेयर जिस रेट पे लिए हैं शुरू में सबसे पहले वाले गिनते जाएंगे, जितने रेट जिस शेयर पे लिए हैं उसको कैलकुलेट करेंगे, राइट?
Yeah.
Anjali, for when you are going for the IP of this buyback, how the shareholder, but the bank's approval is, lenders' approval is compulsory?
Sir, regulations do not ask for it, but generally the lenders' agreements provide mandate for it that in case you go in for any corporate restructuring, you have to take their prior approval.
Correct.
So from those agreement point of view, it becomes mandatory.
So in most of the lenders' agreement, you will find this clause. So therefore, it is generally required to take a clearance from them.
Okay, one gentleman, Shyam Sharma, has raised certain query which we have given reply. Mr. Shyam, because your questions and our answer had little bit contradiction, so you can, we will, Tushar will give you separate reply to all the things because I don't want to create confusion with the others. Okay.
Sure.
Now, Samir, tell me, when you have done your buyback, what problems you have faced and what message you want to give to the all people, those who want to plan buyback?
So I think, one has to really plan it well in advance. It is not a job of a single person, a complete, you have to be in sync with CFO, you have to be in sync with other people also. And at the same time, I would suggest there should be, what we did was we created, number one, a dedicated email ID for buyback, wherein all the email related to buybacks were getting done. Then, to coordination with merchant banker, daily coordination with broker. So I think one person dedicatedly has to be there who can take care of all the things, because daily reporting is to be done. And then at the same time, when you are, in the open offer, when you are doing on a stock exchange trading, so, one has to be very careful. So, 7 baje se lekar ke and, till the time the trading ends, one has to carefully see where the prices are going and all. So I think, one has to be dedicatedly be there on the buyback. If you're really doing a multitasking or doing some other jobs also and thinking that, buyback along with that, I can handle it, it's really difficult, frankly.
Okay. Poonam madam, you have done 2 buybacks. First of all, what is the difference you have faced in one buyback and second buyback? And what is the message you want to give?
Sir, earlier in 2017, when we did our first buyback through tender offer, there was no provision of, there was a provision of sending the offer letters through this mail only, not by the emails, but you had to send your offer letters through courier and speed post and all that. So that time it was totally different. And in 2021, there was a provision of that we can send the through emailers also. So this was a little relief for the company, that for those shareholders for which we have got the emailers, we send the offer letters through emailers. And then for physical shareholders, but then when we got SEBI approval, there was a clause in the approval that we have to ensure that for all the physical shareholders, the offer letters should reach them. We should ensure, the company should ensure that offer letters should be reaching them. So there were some extra efforts which were required to be made by the company and the registrar, that to ensure that physical shareholders are also getting the offer letters. So that was one of the difference between 2017 and 2021. And then the system has become a little bit easier, in 2021. There was some 2017, the depositories with depositing in stock exchanges, there were some issues which faced in earlier, but now the system has become little simplified and it has become easier now. So for shareholders who are holding in DMAT, it is all the more simpler. They just have to go to their DMAT account with the bank, then they have to just do a click on this and the shares are tendered. So it has become all the more easier now.
Okay. Anjali, when you are handling these cases, multiple buyback, what is the main question of the promoter or company?
Main question again remains, which of the corporate actions is a better alternative? What to take into consideration? Which mode to follow? That is a very important question which remains in every promoter's or in every CFO's mind. Another question which comes is it the right time for the company to come out with the buyback of shares, or should we wait for another 6 months, then we should declare the buyback? Those kinds of questions remain. One thing, sir, which probably SEBI should also look into, these days, most of the younger generation have their demat accounts with these e-apps and like Grow or Zerodha, which are faceless. So अगर मुझे टेंडर करने में कुछ भी प्रॉब्लम आता है तो there is nobody to whom I can talk to, or many a times we receive the complaints that there is no link on that particular app to tender the shares. So that those formalities should be made simplified.
Okay. So friends, I think we have given all the answer, and one Mr. Sharma, you can contact us separately, Shyam Sharma. We will give you Tushar, collect all queries and discuss with him and solve his question. So friends,
Sure.
if, in case if you have any question is not clear, answered, which we have given, you have further questions, you can write to us. We will give reply to you. So with this thing, our session is coming to an end. So thank you, Samit. Thank you, Poona Madam, Anjali, Tushar, for covering all questions. We have received, I think, 30 plus yesterday, 70 questions we have received, which we have given answer. And 1 and 2 queries was not clear. So anybody can give answer. So with this thing, I thanks all, and we will meet you again on 4th, next Friday, same time, 4 to 6. I will be in Barcelona, but I'll covering this session from there. Okay, so we will bring out something new, either on ESOP or some other recent amendments or something new which is happening. But one thing I will tell everybody, the first Friday of every month, we are organizing a program on Q&A on 4 subjects: company law, securities law, insolvency, and FEMA. And anything new which has come during that month, from one that program to another program, if you have missed out, you can participate, and you can be what we are doing. We are discussing the amendment, we are discussing the impact, we are discussing that what are the issues in this, and then we are collecting views for referring to regulator. If you are not able to read monthly or something is left out, it's a best thing that first Friday of our webinar, 4 to 6, you join. All your question, all your answer, all your issues will be updated. And the most important thing in our profession is on this professional work, that you should be updated. So you will not miss anything. Continue to participate in this. With these things, thank you very much all, and thank you participant for participating in this technical and very specific subject. Thank you very much. Thank you.
Thank you for
everybody.
inviting us. So thank you so much.
Yeah, thank you so much.
It was a wonderful